So it's a new year, and this is the year you want to make passive income from property. But how do you do that? Well, Luigi Newton owns 30 properties, and in this video, he's going to give his advice to help you get there too.
So there's a famous quote by one of my favorite investors, Warren Buffett, and it says, if you don't find a way to make money whilst you sleep, you will work for someone until you die. So I've used this philosophy in my life, and I found out ways to basically build wealth through property and have passive income. And that's what this video is all about, passive income through property, how you can do it. I'm going to give you the step-by-steps, and by the end of the video, you're going to know what strategy is going to be best for you to get passive income in property. So my name's Luigi Newton. I own 30 properties in Nottingham that I've purchased, renovated, and done the BRR strategy on. And I've learned a lot over the years. I've made lots of mistakes, and my channel is all about keeping it 100% authentic to show you guys how you can get into property in 2025. So when you're getting into property, the first thing that you need to know is that property is a long game. It's not something that is going to be a get-rich-quick scheme. It's not like a fast pound. It's definitely like a way to build wealth. Now, there's two ways you get paid in property. You get paid through cash flow and capital appreciation. That's when you own a property. There's loads of strategies such as rent to rent, which is great for cash flow. But if we're talking about building wealth, this is where we need to be looking at ownership. So when you own a property, you might use a mortgage. So you put down a deposit, and the bank will basically fund the rest of the purchase price. Now, when you use a mortgage, every month you have a mortgage payment. So say, for example, you have a property and it's a HMO, so it's a shared accommodation. You're renting out a property on a room-by-room basis, and your monthly payment is, say, £800 a month, but you're getting £3,000 in rental income. That means that once you've paid the mortgage and any other bills or insurance payments, you're left with a profit figure. So let's just say, for example, you're left with £1,500 profit per month from that one house. That's what you call cash flow. So cash flow is a way you can get paid through property. The other way is when you buy a property, over time, it should go up in value. So that's another way you get paid, is through capital appreciation. So say, for example, you buy a property for 100 grand, and in 10 years time, it's worth 200 grand. You sell that property, you can then walk away with a large profit. So that 100K profit, that's all goes to you. Obviously you have to pay tax, etc., but you will gain a lot of profit from the capital appreciation. Now, what strategies within property can actually be passive? So there's loads of property strategies. You've got deal sourcing, you've got rent to rent HMO, rent-to-rent serviced accommodation like Airbnb style properties. So let's look at what are the most passive strategies in property. Now, passive income, guys, what it is, it's money that you earn every single month that you're not necessarily working for. So it kind of just comes in and you don't have to do much work at all. If it's fully passive, that means you have to do zero work. But if it's relatively passive, you might have to do some small bits of work to get that income, to get that profit per month. So which property strategies have I done that have found to be the most passive? So I would say commercial property and social housing. So commercial property has been great. It's essentially very similar to social housing in some ways, because with commercial property, you can buy like a shop or a commercial building, and you will lease that building or shop to a business, and the business will cover all of the maintenance, they'll cover all of the bills, and you essentially get paid, and your only overhead is your mortgage payment if you do it on a mortgage. So that means, guys, that every month you know exactly how much you're going to get. So the other strategy that's very, very passive is social housing, and it's similar to commercial, because with social housing, you will take a property and you will lease it to a social housing provider. They will cover all of the bills, all of the maintenance. They give you a set amount so you know how much you're going to get, and they give you a long lease as well. So again, that can be very, very passive. So those two strategies for myself have been the most passive. Now, are they fully passive where, you know, you make money every month by doing nothing? No, because for example, with commercial property and social housing properties, you have to initially do lots of work for the first, say, year. You're going to have to find the deal, fund it, manage the renovation process if you're renovating it. There's lots of initial work for, say, the first year, but after that point, that's when it can become very passive for you. When you're looking at starting your property business, you need to be looking at structuring it in a way of making it passive, because if you're watching this video, you probably do want to make passive income through property. You need to be looking at the strategy and also systems. What systems can you put in place to make sure that your property business is more passive for you? there's lots of automations and things that you can do. For example, you can hire a VA. Now, that VA could do a lot of day-to-day tasks for you to make it more passive for yourself. A VA is just a virtual assistant, so you can get a VA for as little as, say, £600-700 per month. They would live in usually the Philippines, and you can recruit a VA by going on to onlinejobs.ph. That's the best way that I've found to find virtual assistants. Right, which property strategies are harder to systemize and make them passive? I would say property sourcing is much harder to actually systemize everything and make it passive. For example, what you could do is you could start a property sourcing business and you could have it as automated as you can. But ultimately, guys, if your name is attached or your business is attached to that deal, you need to check the deal. And in property sourcing, you have to look at a lot of deals to find good ones to sell on to investors. So unless you can hire someone to check over every single deal, is it going to be passive? I don't think so. So I think property sourcing is probably one of the most time-intensive property business strategies that you can do. Other strategies that are hard to kind of make them passive, I would say, is the BRR strategy, working professionals. Now, I do this strategy myself. I don't mind putting in the work for it and kind of working for that income and profit because it is good. You do make good money from doing it. But is it completely passive? No. The reason being is because unlike social housing where they cover all the bills and maintenance, you as the landlord, you have to cover all of the bills and maintenance. So you're going to be on the phone to Eon. You're going to be speaking with your letting agents and signing off certain things that have gone wrong in the property, like maintenance issues. So is it fully passive? No. But is it still good? Yeah. Now, when you're scaling up your property business, no matter what strategy you go for, it's going to be uncomfortable. There's going to be times where you feel like, this is actually really hard, it's stressful, and you feel like you're in the trenches. But honestly, guys, when you feel that, that means you're on the right track. Because if you don't feel uncomfortable when you're scaling up your property business, you are not pushing yourself enough. So you need to get used to being uncomfortable and being in those situations where your back's against the wall, you've got payments to make, and it's stressful. But you're on the right track. So I just wanted to add that in. Now, when you're scaling up your property business, you need to always be looking to hire. So you need to always be recruiting for new people to join your team. Because when you've got the right people on your team, that can really help you to be more hands-off in your business. And that's ultimately should be the goal. I mean, if you don't mind working crazy hours and being on top of everyone and doing everything on your own, then that's great. But if you really want to go far and build a large portfolio, you need to have a team in order to scale up. So for example, me, I've got my sourcing team, I've got my business development manager, I've got my admin staff, I've got all my property managers that manage my working professional HMOs, and that really helps. Now guys, I want to expand that team so I can do more deals in 2025. Guys, just wanted to share a quick story with you. So me, I started out my property journey 7 years ago, and I got to around 3 or 4 years in, and honestly, I realized that I had a big flaw in my business model. It just wasn't passive. I was doing working professional HMOs. I got to the point where I had 10 of them, and I just realized I need to do something. I need to make a change to make it more passive and hands-off for myself. So that's when I came across social housing. Social housing, it's honestly changed the game for me, because when I switched to social housing, what it did for me is it meant that it was way more hands-off. So once I'd purchased the property, renovated it, got it leased to a social housing provider, at that point, it became so passive, and I thought to myself, I need to do 10 more of these, 20 more of these. And that's exactly what I did. So I went from 10 houses to now 30, and I'd say most of the 20 more that I did, there was mostly social housing ones. I'd say like 90% of them were social housing. And it's for a reason. It really is. Because when I'm looking at a business strategy and a business model, I'm not thinking about the money. I am factoring that in, but I'm also thinking, how passive is this going to be for myself? And how much day-to-day work is it going to require for me? And also, who am I going to need to bring on board to make it more passive? So that's what I look at. I come across lots of opportunities. People come to me with deals. They come to me with, partnerships. And I always look at that. As an investor, I'm looking at it like, right, how hands-off is this going to be for myself? And I just wanted to share what it feels like as a property developer month to month. So for me, I use company structures. Now I do this just for tax efficiency purposes. So essentially to pay less tax, you do it in a company structure. So you'll buy the property in a limited company. Now, most people know this, and if you don't, then you really need to look into buying in a limited company versus your personal name. You'll soon realize it's much better to buy in a limited company. But what it feels like for me is every month on around the 20th of each month, I look at all of my different companies and I just pay myself. I pay myself into my holding company from all of my different limited companies. It feels nice. It really does. It's a good feeling because I visioned it. When I was early on in my property journey, I visioned doing this and I'm here now. But it's not over for me. I want to do more deals in 2025. But essentially, on the 20th of each month, I go into each company bank account and I look at how much we can take out. And we just literally just send it to my holding company from around 23 different companies. I just pay myself every month. So that's what it kind of feels like for myself. Now, when you get into property and you invest correctly and you do have it passively, it can really give you time and location freedom. So for example, right now, I'm in Dubai. I'm with my business partner, Sean Davis. He's my business partner on the High Performance Academy. He runs a large social housing business. We teamed up together and we basically help people to start, scale and grow their property portfolios by using rent-to-rent social housing, which is the strategy that he does, and also BRR social housing and BRR as well. So we teamed up together for about a year and a half and we've helped change a lot of people's lives. We're out here in Dubai and honestly, we wouldn't be able to do this if it wasn't for our property portfolios, because every month our property portfolios pay us money. They pay us profit every month. It funds your lifestyle. It funds your day-to-day stuff, your food, when you eat out, your travel, your car, your house. It gives you true time and location freedom. But I love the way that I've set up my business because I can have a lot of time. So I usually use most of my time making social media content. So I enjoy it. I like making videos. So that's what I do. But if I wanted to just stop right now and just stay on 30 properties and just live off that, I could easily do that. But I don't want to do it. I'm hungry, I'm young, I'm turning 30 tomorrow. So for me, I want to keep on building a portfolio. I don't want to just get complacent. Now, the reason I made this video is because there's lots of misconceptions in property. People always talk about passive income in property, and I think people do it to basically sell their programs and sell their courses, but I'm not here to do that. I'm here to let you know which strategies have worked for me. Commercial property and social housing, they've been the most passive. Also, a lot of people make out property to be so easy. It's a walk in the park. You can build your portfolio in a year. You can have 10, 20, 30 properties in a year from starting out with not much money. It's just not realistic. You need to really think of property as a long-term wealth building strategy if you are looking to buy properties. Now, yeah, with rent-to-rent social housing, you can do deals quickly. If you've got the right support, education, the right people around you, you can build good cash flow every single month. But I want to build wealth. That's what I want to do. So I want to keep buying. Now, there is lots of strategies that I just believe are not the ones to focus on. And the reason I'm saying that is because, for example, you've got like rent-to-rent serviced accommodation, which is like an Airbnb style property. So you get a property from a landlord, you guarantee the landlord their rent, and then you make profit every month on top. So on paper, yeah, it sounds great. But the reality of it is, guys, you don't get that consistency because every month you're starting out on a blank canvas. You have to make sure that that property rents on Airbnb, Booking.com, or direct bookings. It has to rent in order for you to make profit in that month. Whereas with social housing, they give you a contract which says, yeah, we're going to pay you X amount every single month on this date. So you know how much you're going to get. With Airbnb properties, it's much different. And I think that is the main strategy I see a lot of people selling courses on, because it's the easiest one to do. You literally take a property from a landlord and you slap it on Airbnb. There's more to it, but I just don't feel like it's one of the best strategies to start out with, because there's no guarantee that you will make money. Now, this is coming from experience. I've done a to-rent Airbnb deal, and in my early years, it was in my first or second year, it made money. Some months, it made like £600 profit in a month, but then other months, I was like losing money. And my rule number one is never lose money. Rule number two, never forget rule number one. Now, how does passive income relate to my investing mindset as a whole? I think it's mainly about when I'm looking at a venture, I'm looking at a deal, I do factor it in, because for me, time is so precious. Time for me is worth more than X amount of money. Depends how much it is though. I will work hours if I'm making £1 million. For example, you look at all these buildings behind me. If I was to do a deal like that, it would take a lot of my time. But say, for example, if I built a massive block and it was going to make me, say, £5 or £6 million, then yeah, I'd be willing to put in that work and put in those man hours and that time, because it would pay very, very well. So I do factor that kind of stuff in, but for me, I am more looking for have a stress-free life. I don't want stress, I don't want to take on a load of headaches. So for me, that's a big thing I look at, is how passive is it going to be for myself. So when you're buying a property and it's leased to social housing, or you buy a property, you give it to a really good agent and it is relatively hands-off for yourself, when you do that, it's kind of like owning a stock, because you're basically buying a stock. For example, you buy like an Amazon or Apple stock. Over time, you're hoping that it's going to be worth more, okay? So there's no guarantee when you're buying a property or you're buying a stock in a business. There's no guarantee that it will go up, but you have to make that calculated decision and kind of ask yourself, how likely is it that it's going to go up in value over time? And also, some stocks in businesses, so say like you buy shares in a business, you can actually get dividend from that. So with all my properties, they all pay me cash flow every month. On my working professional ones, there might be some months where we don't make cash flow because we're letting the account build up. Say if we had like a maintenance issue, then it takes up from your profit. I've had properties before where I've had the roof has had an issue and it kind of eats away at your profit. So that's what I look at, guys, when I'm doing deals, is how passive is it going to be? And I just factor in all things. I look at the best case scenario, worst case, average case when I'm analysing a deal. So I analyse a lot of property deals every single day. I really do. But I enjoy it as well, so yeah. And also, when you have your team doing it, they will filter out all of the dead ones. So say they find a deal, they'll run the numbers. If it's not stacking up, they won't even send it me. And I like that. That's what I've asked them to do. I think I'm very risk averse. Some people's risk appetite is much higher than mine, so they'll take more risks in business. Now that can work for them, but for me, I like to play it safe. I've always viewed my property journey as a marathon, not a sprint. And I'll continue to do that because it's just working for me. Now, I've got this quote online and it says, "In the past, I've met many investors who did not understand the seasonality of their investments. There will be times when a tree will look barren in its winter season. I've seen too many people who want to uproot their trees in the middle of winter. These people never prosper. With just a little patience, that they would have seen the season change and a new growth appear." The reason I like that, guys, is because, say for example, you do a property deal and you know long term it's going to be very, very good for you. But in the short term, you're having difficulties, you might be having maintenance issues, and you're seeing things as a short term. You're looking at things in the right now rather than you're not looking forward to the future. So for me, I always try and look to the future, and I think, right, let's look at the property deal as a whole. Maybe if it's not performing right now, what can we do to make it perform better? And also, as a whole, like in the next 10, 20, 30 years, are we going to regret selling this property? And that's how I look at things. It's a long-term view. So guys, if you need help to start, scale and grow your property business, then click on this link below to find out how I can help you. Also, if you need a mortgage broker, I'd recommend using Mortgage Style. They're the best in the game. I've had 5 brokers tell me no, and Mortgage Style tell me yes. And remember, comment, subscribe. I'll see you all very soon.